Okay, so like today we'll be focusing on the main things or main tools that a new trader will need to be able to participate in the markets, right? So first of all, if you're new, you don't know anything at all, you came to me, you want to get your foot wet in the market, you want to learn how to trade, you want to learn how to make money, you want to learn how to analyze the markets, whatever it may be. The first thing that you'll need is TradingView. So if you don't have TradingView, you need to get TradingView. And you'll also need to pay for the premium data, right? So you can look at you can look at the NASDAQ, the S&P 500, you can look at Dow Jones, E-mini, NQ, yeah. So you need that. Secondly, you're going to need where is it? You're going to need Forex Factory, right? You need this so that you can see all the upcoming economic activities or whatever you want to call it. So you can see the upcoming news, because we use that to trade. And, you have other traders that they're afraid of, red folder news events and stuff like that. But no, these are entries. So we have scheduled entries. Every red folder is an entry, right? And I know that it might be a little bit confusing for some of you, but over time you'll grasp it, you'll begin to understand. So what I usually do is I don't usually look at anything else but USD. You're welcome to look at like Euro USD, CAD, AUD if you want, but I usually just look at USD and I keep the red folder on right here. So yeah, now everything is filtered. Let's see. So this is the date. Okay, this is the date. This is the data for next week. So Monday, no news. Tuesday, no news, which means that we're probably not going to trade these days unless we see like some scalp setup form. But Wednesday is when we'll probably get a move. Thursday for sure, and Friday for sure. Whenever you don't see any news events during Monday and Tuesday, then the trade usually forms like Thursday, Friday, as long as there's like engineered liquidity, which is what these red boxes are. Okay, so now what do you need? What does a new trader need to begin their journey? You need TradingView. Don't worry, we'll talk about other stuff too. This is just for everyone that's like brand new. Got a lot of stuff for you guys. Know some of y'all gonna leak it, but it doesn't matter. Still have more stuff than that. So you need TradingView. You need Forex Factory. Listen, when I say you need something, I mean that you need it. I don't mean that you can just look at the charts alone, look at the data, and you're not aware of what's going on. You need to be aware of what's going on in the markets. And when I say that, you need to be aware of what's going on at a certain time, right? Because we're time-based traders. We don't just trade patterns, right? And if you're new, that might be a little bit confusing for you, but you'll begin to understand. maybe around next month, I'll begin to introduce seasonal tendencies to those who are new. Some of you here are ICT chartered. I know that you know all of that stuff, but I'm pretty sure that you're not using it the right way. Okay. So if you're new, you need TradingView, Forest Factory, and if you can, you need to pay for premium data. Like you need, because we're going to be trading the E-mini, we're going to be trading the NASDAQ, and to those of you that like Bitcoin, Ethereum, we'll be looking at the futures data, right? So we'll be looking at the raw futures data. That's what we trade. That's what we use for analysis. We don't use brokerage data for analysis. We don't do that. Okay, futures data will give us the most truth. And please be aware that we haven't started yet. Okay? We have not started yet. This is just warming up for next year's December 15th. I don't really have to be doing this. I could be doing something else in my time, but I am here. All right. So we'll be focusing on, mostly what we'll be focusing on is liquidity, the types of liquidity. You have internal liquidity, which is like fair value gaps and so on, things that I'll explain if you're new soon, don't worry. We have fair value gaps, old highs, old lows. You know, most of you understand that as ICT traders, but you don't know how to become consistent, which is obviously why you're here. Some of you will probably leave around the second, third month because you'll find something that, you know, will make sense to you. And that's fine. That's okay. That's what I want. Okay. And just don't like steal it and say that you found it for yourself when I introduce certain concepts to you. You know, at least say that, you know, give me credit for what I'm going to show you, because no, not even ICT has even showed you guys like what is, it doesn't show you guys which order blocks are actually higher probability. It doesn't show you guys how to properly distinguish fake SMT from the real one, right? And those are some of the things that I will be teaching you guys in the first month. So let's talk about TradingView now. So you see everything that I have here is what I use. These are the shortcuts that I have for my, what's this called again? My toolbar. So I have the vertical, this is for those who are new. This is what you'll need. I have the vertical line, Fibonacci retracement. I use this, you know, mostly to annotate. And I have the horizontal, sorry, my bad, bit my tongue there. The trend line, the rectangle, you know, to draw boxes, highlight fair value gaps, and so on. I also have the arrow, cross. You can see everything. It will be recorded, so you can just pause it and look at everything that I have here. So you can favorite all of these if you're new, and if you want my settings for my fibs, I'll give it to you here. I put it on the screen so you can see. So these are the settings that I use. I don't always have everything selected, but yeah, these are the settings. You can pause this whenever you're rewatching it. Again, this is like a basic video right now. This is for people that know nothing or they're new, don't know where to begin. So the first thing that I'll be introducing to you guys is how to find a higher time frame bias, right? Which is what ICT calls quarterly shifts, right? It's 100% time based, even though it has some price related concepts that must be used to determine the swing points, which give explosive moves. So quarterly shift. So every 3 to 4 months, there's a quarterly shift. This is like the main thing that you have to learn, right? And if you are a crypto trader, what's this? If you are a crypto trader, then you'll use the stock market to track the crypto market, right? Cryptocurrency usually follows stocks, and if it's not, then it's just being delayed, right? So sometimes you'll be seeing the stock market going down and the crypto market going up, right? If you ever see that happening, then you can just anticipate a stop run in regards to crypto, Bitcoin, Ethereum, whatever you're looking at, and then anticipate the market to correct in the same direction in which the stock market is. So we'll look at, I'll give you an idea of what we'll be looking at. So as you can see right here, hold on. Let me get the NASDAQ as well. This is something basic, but ICT teaches this late in his premium course, but this is one of the most important things that you must learn, right? And we will be using this in real time next year to gauge markets and so on, to be on the right track, etc. So if you guys were with me last year, the middle of last year, then you know that I was bearish on the stock market here, all the way down here. The reason for that was because of, don't worry, we have more detailed videos. Remember that this is just, introduction. So we had SMT right here, where we had the S&P 500 make a higher high, NASDAQ failed to make a higher high and made a lower low, right? And this happened after a quarterly shift that took place down here. You can go back in and use what I'll show you there to see it. So right here, you'll see this, right? So after price breaks below this swing low right here, that's when the market shift directions. Remember, every 3 to 4 months, which is approximately every 60, 70 trading days, you have a different quarterly shift. So when you do this right here, so like right here, you see that price fell until it reached around this period of time, which is around 60 days, exactly 60 days. So when price fell here, it immediately rallied. There was no like major indication that price would rally down here. You see, there's no like PDREs here that would make sense. This is all time based. So price rallied here, and there was liquidity here, and liquidity here, which price gravitated towards. Like, I think I got to long here. I did get to long here. I posted that trade on Twitter also. I was bullish here. I talked about it, and you know, price does what it's programmed to do. So price dropped below this low, took the liquidity below this low, and rallied during the time when it's supposed to do this, right? So how can we use this to help us in the future? Like this. And you will see this in real time because yeah, I'll be here. So you'll see this in real time. This is not foolishness. And if you go back in your charts, you'll see it as well. So like I'm showing you this right now, which is, you know, this is, I haven't even applied quarterly theory to this yet. This is just time right now. If you apply quarterly theory, then you get more accurate, right? But yeah, right now we're just focusing on framework, you know. I want to get you guys thinking the way I wish that I was thinking the first time I began doing this, like 4.5, 5 years ago. Right? I need, like, these are the things that are really important. It's not fair value gaps. It's not liquidity pools. It's not nothing that you can really see. It's things that you can measure. It's time. So price will fall for a certain amount of time. Price will go up for a certain amount of time. That's what it does. Okay. So from this point right here, you can see if we go like this is where price should not pass, like it should not be past like February the 15th and price doesn't begin to fall. That should not happen. So we'll be waiting to see reversals. You know, normally I don't trade during December, and because during December and January, that's like the lowest probability months of the year, right? So I don't trade during December. I barely trade during January unless I'm like scalping. If I see an obvious setup, then, you know, I'll share it with you guys and we'll go over it. But yeah. Sorry about that. I'm gonna drink some water. Okay. So around this time, when it gets to like, 50, 60 days from this low right here, we should be seeing price either setting up some equal highs here to run then fall, or we should just see a straight up reversal. Next year, I'm expecting high probability conditions. So like during the month of like February going into May, we should see some bearish price action. In regards to the stock market, we should see bullish price action in regards to Euro USD due to the fact that they move in the opposite directions basically 90% of the time. This can also be applied to quarterly theory, but in regards to time frame, this is the daily time frame usually governs the macro trends, right? So this is the time frame that people with deep pockets usually trade with. You know, they don't really have time to be sitting around watching 1 minute charts or 5 minute charts, which you'll learn about. Don't worry about that. You'll learn about that. But yeah, they don't have time for that. So I'll apply a little bit more lipstick to this to, you know, so yeah. So we have price. Right here, price gave no, the only entry that price gave us when it barely traded back into this order block right here, this down close candle, and then it expanded, which is why the only place I got to buy was here. So if the price went here, traded into this breaker, which you'll learn about, not really that important, right? Because time is important. As long as you have time on your side and you know you understand imbalances, which is these are imbalances, right? You will be ahead of the curve in no time. You know, when Michael teaches, he starts teaching about things you can see, basically, which I do not believe are the most important things. If you don't understand time, you won't know what the order block is. If you don't understand time, you won't know which fair value gap to use. If you don't understand time, you won't know when to trust SMT divergence and so on. So basically, whenever price makes a high around here this time, which we'll be looking for, this video will be here recorded, and then we'll come back to it and look at it and see how our predictions did. Right now, price is not the best to trade. It's December, of course, so we have to take that into consideration. So yes, if you're new, you need TradingView, you need Forex Factory, right? TradingView is where you know you'd read price, and Forex Factory will be where we'll look for the times in which we should anticipate setups. All right. I'll talk about more deeply about quarterly theory soon. I will probably be with you guys a bit frequent. So yeah, and until before January, and then we'll have our scheduled dates where we should meet. Hopefully you guys got some type of insight from this, and if you're new, please be sure that you get everything that I tell you to get, right? And you don't need indicators on your charts. You won't need indicators on your charts. You have charts that are marked out just like this in no time. You don't need any indicators. All they'll do is slow you down. Trust me. So I'll talk to you guys soon again, and I hope that this was insightful.